Futures trading involves substantial risk of loss and may not be suitable for all investors.
Good morning. It's Wednesday, May 14th. I'm Philip Streible, Chief Market Strategist at Blue Line Futures. So let's look at the price action overnight. With U.S. equities consolidating after the surge and perhaps waiting for more data and announcements from the Trump administration. We have precious metals edging lower and energy prices running into resistance. So focusing in on the equities, looking at the S&P 500 just fractionally higher, trading at 59.10. That's up 6.25 with a high overnight at 59.17 and a low at 58.96 So quite a tight trading range here, and this comes after global equities saw their second largest notional buying in 5 years on Tuesday. But perhaps we're running into some rally fatigue as is taking hold with little movement across the asset classes overnight. The recent sharp rebound has erased all of 2025's S&P 500 losses, but traders are really waiting and seeing before buying with so much macro and policy uncertainty still out there. You look at the NASDAQ up about 25 basis points, trading at 21,333. That's up 55 points. You've got NVIDIA leading the Mag 7 higher in the pre-market trading, and it's on track to extend its Tuesday's gains, which came after the chip maker announced a deal to supply chips to the Saudi Arabian AI company with a massive data center project. So looking at the economic data here today, we just got a flurry of Fed speakers. We won't really get any kind of significant market moving data until we look at Thursday, where we get producer price index, retail sales, unemployment claims. Fed Chairman Jerome Powell speaks, and he may provide more clues as far as the impact on with tariffs on the inflation and on the economy here. So looking at Trump and the CME's Fed Watch tool, President Trump, he's still pressuring Federal Reserve Chairman to lower interest rates, and he's citing that softer than expected inflation report. Now, yesterday we had CPI rise 0.2% in April, with the prices of goods expected to be affected by tariffs advancing less than feared. So we had weakness in the services categories also weighing in on the numbers. And despite the forecast here, you have tariff-driven price increases maybe more pronounced in the months ahead, which may keep the central bank hesitant to cut rates. And that's really what we're seeing here, is that those forward expectations have really come down quite a bit. And really the first interest rate cut is looked at most likely in September, with the possibility of 50 basis points, and then December a 25 basis points. And that's how we would get our 3 interest rate cuts throughout the year. Now, a lot of analysts are pushing back on that, saying it's either September or either December, and that's the reason why you have the 2-year treasury yields back up over 4%. Remember, if you're a gold trader or a precious metals trader, you really don't want to see those interest rates hold. Your 2 biggest concerns are rising dollar index and then also a rotation in the U.S. equities, and actually the third would be those rising 2-year treasury yields. So that's why you look at the gold market, and perhaps gold futures are just bouncing to lower highs here at the moment. You've got gold futures down $8.70, trading at $32.39. Now, the markets have strongly defended that $32.20 down to 3,200 level, and we've seen a massive snapback. And you look at the gold futures, and what we outlined in the chart pack is that you look at that old resistance here. Obviously, we've got this double top around the all-time highs, and then frankly, you've got another sign of resistance at about 33.65. So you come back down to this 32.20 mark, and if the market starts to press below and we break below it on perhaps some keynote speeches from one of the Fed officials, maybe some data here that causes a rotation, some easing of concerns, and you see U.S. equities extend their gains, you're going to see the gold market come under pressure. And that's why I believe that kind of a new price band will present itself down to 31.50 on the downside, and on the upside it could be something like 33.50, and you get this $200 consolidation range where we go into for a while. Something you got to note is that we outline support and resistance levels, but those support and resistance levels become old news once we break out to new regions in the market. So just because of the fact that the market has held a resistance point or a support point for so long, remember, old resistance can become new support at any given time. Now we look at the industrial metals here, they've got a little bit more of a mixed picture. You have silver down about 4.5 cents. You got copper down 3. You got aluminum making new highs. You got platinum hovering just right around 1,000. You got palladium at 957. The platinum, palladium, and aluminum markets are all positive. We saw positive reaction in the copper market last night, and we see silver futures back over $33. So you look at the gold silver ratio dropping to 98 to 1. Now, industrial metals are having just especially sensitive ones like the silver market. They're kind of diverging from other markets here where they should start to play catch up against things like US equities, especially if we start to see the concerns about some of the economy and what's to present from the long run. So if we start to get long-term trade resolutions and we get this reaffirming that we're not going to go into a recession, that the economic growth is starting to stabilize here, that's where you see industrial metals lead the charge. Now, over the past few weeks, I talked about the length of time that we've been in these bear markets before recapturing, the unchanged levels here, and we broke that down. We've also discussed about how the industrial metals generally lead the charge when you come out of these types of environments like COVID, like the financial crisis and things like that. And that's where you start to see the reflection of the gold silver ratio. Now, something we'll start to see as well is we'll see the ETF flows and the changes in dynamics of that. So the exchange traded funds, they cut about 150,000 troy ounces of gold holdings yesterday. And that brings this year's net purchases down to 5.83. So you get a small decrease in the ETF flows here with 7% change here on the gold market year to date. Now the ETFs, they added about 864,000 ounces of silver holdings in the previous trading session, bringing this year's net purchases to 20 million ounces. So that's the fourth straight day of growth in the silver market, and it takes that increase up to 2.8%. So the gold silver ratio last week on Friday, 101 to 1. You go to the early hours yesterday, 98 to 1. You go to today, we are breaching back below 98, and we should be attacking the 97 level, which is the April 23rd low. And it shows you that possible rotation into industrial metals and out of the safe haven asset classes. Now you look at crude oil futures, another thing we outlined in the chart pack, coming right up to that resistance point. And it's really those April highs here where we saw where you look at the market in for most of 2025 and going back into some portions of 2024, the support level, $63 to $65. And what happens? Old support, now new resistance. Market comes up to it, tests it, backs off, makes a double bottom, comes back up, and we're near that resistance point. So a lot of traders out there were putting on put spreads in the crude oil market because no one is looking that way. And obviously Donald Trump favors $40 to $50 oil. There is supposed to be an announcement here with OPEC where they may potentially raise supply again here in July. You might have some softer demand, even though we are avoiding a recession and we do have reduced shale supply, but the risks, I believe, on the crude oil market lean a bit to the downside. Now, other markets that are breaking out, we've got soybeans doing really well here, pushing back up today. Big reversal to the upside yesterday. You've got sugar prices reversing back to the upside, pushing higher. Bitcoin futures consolidating, perhaps new price band here, this 105 down to 101 level. You've got the dollar next struggling here to hold on to its gains over the 100 level here. So a lot of different things to look at here. It's really, the market is kind of calling time out at the moment. It's like we've reached halftime here on this particular sell-off in the markets and things like that. The market was battling its way all the way back, and imagine it as like an NBA playoff game, and we've tied it up at halftime, and thank God it's halftime so we can call up and draw up some new plans here for the second half of the game. So you guys got any questions, give us a call or reach out to info@bluelinefutures.com. Remember that futures and option trading, it does involve risk of loss, and it may not be suitable to all investors. Good luck and good trading.